Hello and welcome to the Energy Connect studio at ADIPEC 2024. I'm delighted to have sitting next to me in the studio, Murali, the head of Climate Action Services at SLB. Thank you, Shai, for being in the studio.
My pleasure. Thanks for having me here.
Thank you. And to start off, can you tell us how regulatory changes as well as investor expectations are influencing sustainability strategies in the energy industry?
Sure. So regulatory frameworks, which are ever evolving, and investor pressure is now pushing a lot of companies to have sustainability strategies which are measurable, data-driven, and making sure that they do not succumb to greenwashing claims, etc. So that's a significant trend that we are seeing. Second is that we are also seeing a convergence of what ESG metrics, that's environmental, social, and governance metrics, are looking for, as well as investor needs around sustainability are converging. So companies are now able to have a more cohesive strategy that aligns both together, which is very, very interesting. It's also less work for the company, so I think they're happy about it.
Absolutely. Now, how do you see within the oil and gas space, how do you see oil and gas companies balance their sustainability goals with commercial interests and their business needs?
Sure. So that's a great question, because with investing in sustainability does come at a premium, right? And for a lot of companies who want to focus on economic and business priorities, it is important that they are able to make sure that they invest in the right technologies. Okay. So one of the things that we are clearly seeing is that they're doing financial analysis and due diligence that incorporates sustainability strategy with their core business strategy, because that's an element of managing their both financial and reputational risk. So they need to make sure that they are able to deliver on their sustainability goals as well as their business and profit goals, right? That's one. The second part is that we are seeing a lot of these companies now diversifying themselves in the oil and gas industry into low carbon technologies, low carbon fuels. So oil and gas companies getting into renewables, getting into fuels like hydrogen, sustainable aviation fuel. So there's a huge move to have a diversified mix of products, which overall has a lower carbon intensity. So the companies are also seeing that as a need of the market and moving towards such a mixed portfolio.
Well, that's an excellent point. And it brings me to the next question is, how can, again, within the oil and gas space, how can companies sort of work towards reducing their emissions, but without compromising on their operational efficiency?
Again, a great question, because there are several ways that they can do that. Earlier, the thought was that if you invested in sustainability and decarbonization, at some point you had to compromise on not hitting your production goals or compromising on your production capacity. But that's not the case. For example, we see a lot of companies investing in emission reduction measures such as energy efficiency or electrifying their operations using renewables. And all these allow companies to actually optimize their process, improve, in addition to emissions efficiency, also improve operational efficiency while maintaining their production capacity. So that's something that we are clearly seeing as a trend. And the second part is that for companies who have managed to reduce all their emissions, they are also investing in technologies, carbon removal technologies such as CCUS, carbon capture, utilization, and storage, and they are able to make sure that they are investing in these technologies, but still maintaining their production capacity and their growth estimates. So it allows them to balance on their profit goals, at the same time also making sure that they are justifying their role towards responsible production and obviously helping or saving the planet as well.
I think despite all those measures, there's still certain challenges that companies are bound to face in their net zero journey. So what steps can they take to overcome them?
For oil and gas companies to get into decarbonization initiatives and invest in decarbonization technologies, a lot of times it's a big step, and they have to have an upfront investment in some of these technologies. And that might not always be the case if they are trying to do a business case for investing in these technologies or taking these projects to their board for approval. So we strongly feel that companies, especially in traditional oil and gas, when they want to move into the decarbonization space, they take baby steps. They need to take a step-by-step approach. They want to make sure that they are trying out technologies, see what works. We usually say they should be delivering a thin slice of value first before they go into a big bang approach, because you don't want to sink a lot of money into a project and then realize that it's not working. And why I say this is that decarbonization can be solved by several technologies that are not even invented yet. So there is an element of uncertainty in how companies would approach this, and it's only fair that they take a slow and steady approach to solving this.
And you spoke about some of the technology that's not here yet. What role does digital technology play within sustainability for oil and gas companies?
Again, another great question, because we feel digital integrally can actually bring about a huge reduction in emissions. There are actually studies that show about 20% of the emission reductions between now and 2050 can be achieved by a proper deployment of digital technologies. So, for example, right, you can use a lot of digital tools, data analytics, AI, to come up with measurement techniques that are more automated, connect to several systems, and overall reduce the lead time required to do decarbonization measurement, which allows companies to look at their baseline, have a baseline created, so that they have a baseline from which now they can measure reduction over the years. Especially because some of these goals that these companies have are multi-decades and multi-years, right? So you hear about companies having targets for net zero around 2040, 2050. So what you're planning today needs to stay for a long period of time. And that's where we feel that companies can really leverage digital. Today, a lot of companies are doing it very manual. They use spreadsheets, and yes, it can only go so far. The minute they want to scale these technologies, they really struggle to implement, and that's where we think digital can really make a difference. And if I can give you examples, right, Internet of Things, IoT has come a big way in allowing companies to do direct measurement of emissions. So getting as close as possible to the point of source of emissions. So then you're not making estimates, or you're not making carbon emission measurements based on some theoretical model. You're actually having data collected at the point of source of emissions. An example is actually methane emissions, which is a big topic in oil and gas. And today you're seeing a plethora of technologies that allow organizations to measure methane really close to the point of source of emissions. Even satellite technologies, which have been there for a long time for methane detection, now you are seeing the second generation of satellite imaging, which has a much higher resolution. So you're able to track methane emissions all the way down to a very high resolution. You can point to the exact source of the methane emission. And you can also use that data to now reconcile with sensors that you deploy on the ground. So we work closely with the OG, what is called as OGMP, the Oil and Gas Methane Partnership Standard. And even they request that at the highest level of managing or measuring methane, you need to have a reconciliation of ground-based detection with the top-down detection by satellites. And all this is only possible with digital tools and solutions. So we strongly feel that it can make a huge difference in the coming decades.
Absolutely. And I think after COP28, there's been, I think, a renewed focus on OGMP 2.0. And
yes, that's extremely correct. And what is important is that majority of the oil and gas companies are all aligning around that standard. The struggle that sustainability and decarbonization has faced, and even now they face in some other topics, is that they haven't aligned on one single standard. So you have multiple standards, different ways of calculating emissions. And so companies have this burden of doing it multiple times as per different methods. Yes, they're all, in some way scientifically correct. So it's not that one is right or the other is not. But it just is more tedious for companies to do it. And as long as the world aligns on one standard, companies can then also focus on investing in streamlined technology and keep developing it.
Right. Now, measuring and monitoring it, earlier circling back to your comment initially about greenwashing, digital technology can also help avoid those charges of greenwashing or avoid companies step away from greenwashing.
Very much, yes. You're exactly right, and you bring up a good point because, as I mentioned earlier, today the process is very manual. You're using spreadsheets. There's a lot of human intervention, and there's a high chance that just because of inadvertent human errors that you end up with what we call as multiple sources of truth for emissions of carbon within the same organization. With digital technologies, you are able to get a traceable, auditable source of truth. And usually you are able to come up with a single source of truth for carbon or for emissions across the organization. And we feel that it's extremely important that organizations have a single source of truth for carbon, because it's that same carbon measurement that is used to report out to different stakeholders, whether that's a regulator, a rating provider, a financial institution from whom they are looking to borrow money for decarbonization. So that's what digital brings in. Digital brings in this the ability to have what we call as a network that can be trusted, method of measurement that can be trusted, and there's less human intervention with it and more automation.
Now, while this is excellent news in terms of the setup, when companies are trying to adopt these systems, what are the hurdles that they are facing and how can they overcome them?
Great question. With any deployment of digital, especially in the energy industry has traditionally had a lot of systems which some of them are outdated. They've been there for multiple decades. And a lot of the new digital technology requires, that they connect to different systems, there are different formats of data, different protocols, and all that is not easy. It can be very complicated. It can be very overwhelming for an organization that's not digitally mature. So that's an area that we think that they struggle a lot. Second is that even as I mentioned earlier, they need to take a step-by-step approach, show a thin slice of value before they can actually translate that value across the organization. That's not possible with some of the systems that they have today, which is why we at SLB promote scalable cloud-based solutions where you can, invest as you go, and it grows with the size of your projects. And you can see results, you can look for milestones, and you can look for gates where you see value before you move to the next level of investment. So those are some examples where companies are struggling today and how they can overcome those struggles.
And finally, going back to your earlier comment about emissions and especially about methane, related to that, how is SLB supporting oil and gas companies to meet their decarbonization goals?
So we are heavily invested in a future for the industry in decarbonization and energy transition. So the way we are building digital tools, we are building deployment technologies that allow our customers to measure in a auditable, traceable way. So it can bring in data from multiple systems. You can bring in data from different functions in the organization and present the information in a way that allows for decision makers, both internal as well as external entities like regulators, to look at the data and take decisions, track trends and track patterns, etc. So that's one thing. We also have tools that allow decarbonization planners to plan for multi-year projects, prioritize those projects. Also decide, do scenario planning around decarbonization projects, and based on their constraints, whether that is, commercial or budgetary. So they might just have a limited amount of budget. So we have tools that allow our customers to optimize on what is the mix of projects they need to invest in and deploy to get to their decarbonization goals across multi-years. And we also have heavily invested in a lot of new energies. So we have the SLB New Energy, which is invested in carbon capture and storage, low carbon hydrogen, and other technologies which allow our customers to see through all the way from measurement, what I talked about, through planning for their decarbonization programs, as well as deploying actual technologies on the ground. So we hope to be the trusted partner for our customers across the value chain as they go towards this long journey of sustainable transformation and try to achieve their net zero goals.
Shai, it's been such a pleasure hosting you here at the studio, and thank you so much for your insights.
Thank you so much for having me here. It was I really enjoyed the conversation.
Thanks for watching, and don't forget to follow us on our social media and on energyconnects.com. I'll be back with more studio interviews. Stay tuned.